What's going on, YouTube? Welcome back to my channel, Goofy Investing, where we talk about investing in the stock market. This video is going to be a pre-earnings preview of SOFI. Okay, we're going to talk about consensus estimates, expectations, what I think is going to happen to the stock, and so forth. I'm going to try to make this a quick video. So without further ado, let's get into it. All right, so SoFi, they got earnings coming up on pre-market July 30th. So we'll check the little calendar. That's Tuesday, all right? So Tuesday before the bell, they're going to be set to report. And then, so they're going to report their numbers. There's going to be a little press release on results, and then shortly after, probably while the market starts running, they will probably do an earnings call, either while the market's running or at the end of the day, depending on how they feel or whatnot. All right, so to tell the story of expectations, we got to dig into the last guidance and then look at what analysts are giving credit to the company for, and as far as what analysts are setting the expectations for to begin with. All right, so let's get into that. All right, so we'll go to, if you have Seeking Alpha platform, which I do, so go to earnings estimates. Let's look at it from an annual basis. All right, analysts or consensus estimates for analysts for EPS for this year is 9 cents. Okay, let's go back to earnings on Q1 on what they've been guiding for this year as far as EPS. All right, so their fiscal year 2024 guidance, this is from management. They expect to deliver on a GAAP diluted EPS basis of 8 to 9 cents of EPS. All right, so we go back. Analysts, there's 13 analysts, and from the low to high range from 6 cents to 10 cents, analysts got them doing 9 cents. So right off the bat, analysts are guiding at the higher range of SoFi's guidance. So they are giving the company credit for this year, at least for this year. They're giving the company credit for the higher range. All right, so that's something to consider. All right, now let's go to the revenue estimate for this year. All right, we'll go back to the company's guidance for revenue estimates. All right, they're expecting, for revenue, they're expecting, well, that's the quarterly. Okay, so let me see here, bear with me. Okay, 75% growth versus 2023 levels. All right, and tech platform net revenue growth of 20% of the 2023 levels. So pretty much what that calculates as, where is this revenue? Okay, there it is. So 2024 revenue guidance, they're expecting 15 to 17% from 2.39 billion to 2.43 billion. All right, we'll go back to consensus estimates. They're giving them credit for 16.64% revenue growth at 2.42 billion, from the low of 2.34 to 2.5 billion. And those are 13 analysts as well. So they're probably, there's equal amount of analysts, as you can see. Sometimes with these companies, you get a lopsided amount of analysts. You might get 2 for the EPS, but you might get 10 for the revenue. So something to consider. There's an equal amount of analysts. All right. So going back to it, 2.43, all right, is what the company is guiding, and 2.42 is what the consensus estimate expectation is. So more on the upper range once again. All right? So, um, so consensus estimates, the analysts, they're giving the company credit for higher expectations. So they're maybe assessing a little bit of a low balling happening, all right, with the company, maybe. But from a yearly perspective, that's what we're seeing, all right, for consensus estimates as opposed to management. All right, moving on to quarterly, going on to the fun stuff, right? All right, the what's expected for this quarter coming up for their earnings in 2 days. Consensus estimates got them doing 0 cents in EPS. All right, we'll go back to consensus estimates as far as guidance from the company. Let me see here. So they're guiding 16%. They're guiding $10 of GAAP net income in translation. All right. Um, they don't now. I'm tracking. Management has not given an actual EPS guidance for the actual quarter, so you would have to do the calculations within the actual dilution rate. And typically, I don't know how it's going to translate as far as $10 to the GAAP net income to their actual dilution rate, because their dilution rates can fluctuate. But I think they're going to do 2 cents. All right. So, but consensus estimates got them doing 0 cents. All right. So I think some of the permabulls maybe got SoFi doing 3 cents. And you can kind of feel and gauge this out, based on prior earnings history, and what the kind of the dilution rate. I'm not going to get into the quant. I'm not going to get into quant this video because I don't want this to be a long video. But yeah, I got SoFi doing 2 cents, all right, of EPS. Maybe 1 cent. If they do 1 cent, I'm gonna be looking into the numbers a little more to see, what the execution strength is with SoFi and so forth. But I got them doing 2 cents. Analysts got them doing 0 cents. I think Permabulls got them doing 3 cents. If they do 3 cents this quarter, this stock's going up. Okay, as long as revenue comes in line as well. I think that I think EPS may be more important at this phase in SoFi's growth trajectory phase, because when the profits start coming in, that it's hard to dispute that energy coming into the stock. All right. Um, so on a quarterly perspective, analysts got them doing 567 million point 567.83 million at a 16% revenue growth. All right. So the company has guided 565 million at 16% revenue growth. So still, maybe a little bit, their, guidance is a little bit more than, so analysts got guidance more than what the company has given guidance for. So analysts are saying 567. The company is saying 565. Okay, on the actual high end or what have you. So some to consider. I think SoFi can meet the. I hope SoFi meets the consensus revenue estimates quarterly for these 9 analysts for this quarter. This is the weak quarter that SoFi guided at. So analysts are saying you're lowballing, and this is just my perspective than what I see. Analysts are saying you're lowballing. We're gonna up the level of expectations, and if you miss, we'll crush you. It's pretty much what's going on. So I mean, at these levels, and we'll get into that. All right. So now that we got the expectations out of the way, let's look at some other metrics. Okay. We'll look at some technicals. For the past 6 months, SoFi has been trading on an up and down range, but more so going down. All right. You see it goes up, it goes down, as a lot of these mid and smalls are doing this right now. But in more so in the end of June, beginning of July, We've hit the bottom down range into the sixes. We had that Qatari investment firm sell out their stake and sent the stock down. I don't know about y'all, but I was buying in these ranges. I upped my position to 2,000 shares or what have you. And then we ran up, got a little bit ahead of ourselves. I think that the bears started coming in. There was this last high over here at 787 at around April 26th. We retested that high, and I think it attracted a bunch of the bears to come in, to put up and start doubling down shorts and such, putting the stock back down to 7. And then, oh crap, we got earnings coming up. So there's probably more buying pressure there to be had. All right, so that's my take on the technicals. Very elementary, I know, but that's pretty much how I like to keep it. All right. So let's go to the options chain. Let's see what we got here. All right, for upcoming for the next week, expiration Friday, as all the options do expire. They go weekly and they expire on Fridays. So August 2nd, all right, for this week of earnings, this is what the options chart is looking like. All right. Um, I think it's high premiums, okay, to go up, all right, and low premiums to go down. So I think I assess that the market thinks that stocks going up, all right, on earnings, and I would probably have to agree, all right. Um, but there is a lot of call option resistance, so that could affect SoFi's ability to go up to 9, depending on outside institutional forces and volume and liquidity. Um, I think, and this may be sounding as a shock. I think SoFi might not rocket as high as people think, and I hope I'm wrong. But and it just depends on if they do 3 cents, 2 cents, 1 cent, or just come in line. All right. If they lose on EPS, this thing's going to crash down to like fives. I bet you this thing goes down to like the fives if they report negative EPS numbers. So that's just my take on it. But hey, take it for what it is. All right. There is a put wall here for buying pressure right at 7. So, and this put wall pressure is 51,000 contracts, is almost twice as 2 levels of calls. So if you know how to read that, if you get my drift. So um, low chance it goes down, but there is good resistance at the $7 psychology level when it comes to options. Let's look at my position real quick. Let's pull this up and let's see what I got, what I think about it all. So yeah, like I said, I was buying into the $6 ranges, a little more heavier. I upped the position to 2,000 shares. The way I see it in portfolio management, I do have the loan share lending program enabled on my brokerage, so I can garner some interest off my positions. And pretty much what that entails is when the bears start coming in and they start shorting, or they be doing naked puts or naked calls or whatever the case, they need to borrow shares to margin it out. Okay, so um, pretty much I got loan sharing, so I can kind of gauge it. I look at this more as gamification. All right. So if the bears are coming in, if I get loans, if I get an L next to the actual position, I say to myself, okay, the losers are coming in, the bears are coming in. Why? Because they're starting to borrow my shares. All right, so there's more attention, more shorting attention, and derivatives happening within the stock, more manipulation, etc., if you will. So I kind of figured the stock was coming down, and that happened a little before stock went down to the actually it happened right. Let me go to this technical range. Short that lending shares lending started hitting my portfolio around 17th of July, and then stock went down to the like $7 range. Okay, $7 even range ish. So I kind of knew that stock was going down when the shares lended on my portfolio started happening. So that's just my take on it. That's how I kind of read things. It's like if you're playing poker and you're looking at the hand and you're looking at the board and all the cards in the deck. Okay, it's a deduction of, okay, I know this person has this, might have this card, or I can remove that card, and so forth. It's kind of how I view the shares loaning on the actual portfolio, if you will. All right. So what do I plan to do with the position? I'm happy with my amount of shares right now. 2,000 shares is good enough for me. Um, I think SoFi does 2 cents of EPS, and I think stock goes up into the $8.25 range. This is my projection. I don't have a crystal ball. Um, and I think we build new support there, and they reiterate, and I think they're going to beat, and then they're going to raise guidance as well. And 8.25 to $8.50 range, new support on the stock, is kind of what I'm thinking. I could be totally wrong. It is very damn near impossible to project the technicals on earnings coming up when you don't know for sure what they're going to report on the actual earnings and so forth. So that's my take on SoFi. This video ran a little bit late, so sorry about that. I try to keep my videos. I'm going to try to start keeping my videos under 10 or around 10 minutes. But if you're getting value out of these videos, hit the like and subscribe. Do your boy a favor, all right? If you're very interested on how I do analysis, and you know and you want to be part of a community, consider subscribing to my Patreon and joining the Looney Syndicate, where you get exclusive access to the Hidden Gem Collection, like-minded investors. I have exclusive little products on there that are included within the membership, different investor spreadsheets and tools, to where I actually give instructionals and actually give you the thesis thought process on how I assess valuation, growth, risk, etc. So $5 a month, and definitely a lot of intellectual stimulation going on in that Patreon, and good opportunities for growth and mentorship. So something to consider. Thank you all for watching. Thank you all for your time and attention. And without further ado, have a good weekend.